Warren Buffett is one of the most successful and well-known investors in the world. Warren Buffett is reportedly worth over $100 billion. He was born on August 30, 1930. An ambitious young businessman, Warren Buffett is in the early stage of building his financial empire. He set his sight on a struggling company out of Midwest, hoping to break it apart and sell its assets. The Oracle of Omaha has remained as one of the richest men in the world. In this video we're going to learn how Warren Buffett beat the stock market and became a self-made investment billionaire. Warren Buffett's immense fortune is tied the world's largest conglomerate, Berkshire Hathaway. Buffett himself was lucky enough to be born into the family of a local stockbroker, Howard Buffett. Buffett was born in Omaha in 1930, right as the Great Depression was kicking off. Warren's father was a smart businessman, so despite the crash he was able to provide for his family. In 1942, Howard moved the Buffett family to Washington, D.C., where Warren naturally felt very lonely. He'd spend his days doing math both at home and at school, and reading investment books in his father's study. It is these early years that instilled in Warren the ambition to become rich, and in fact he would tell his friends in school that if he wasn't a millionaire by the time he was 30, he would jump off the tallest building he could find. He displayed an early aptitude for business and investing, and by the age of 11, he would buy 6 packs of Coca Cola and sell them to his fellow students at a markup. His first real job came in 1944, when he started delivering the Washington Post around his neighborhood. That year, the 14-year-old Warren Buffett filed his first tax return, featuring a $45 deduction for his bicycle and watch. With the money he made delivering newspapers, he would purchase pinball machines, which he would then place in stores around the neighborhood. In 1948, the family was forced to go back to Omaha. Warren sold his pinball business in Washington, D.C. for a little over $1,000, and back home in Nebraska, he used that money to buy a 40-acre farm, which he then rented out. Warren used the farm's rent to pay his way through the University of Nebraska, where he got a bachelor's in business administration. He went to the Columbia Business School. There he met a teacher who would change his life forever. In fact, that man, Benjamin Graham. The two met in 1949, the same year when Graham published his magnum opus, The Intelligent Investor. Buffett fell in love with this method and he quickly became one of Graham's favorite students. Just a few years after graduating, Warren went to work for Graham at his investment company. There, Warren would master the art of security analysis, learning how to see the real value of a company just by glancing at its numbers. But, just 2 years later, Graham decided to retire, closing down his company and leaving Buffett on his own. Now at the time, Buffett had saved up $175,000, which he used to start a partnership where he could apply Graham's method. In 1958, Buffett noticed the Sanborn Map Company, which held a virtual monopoly on the production of detailed maps used in the insurance business. The company had been around for nearly a century, and while it had been doing poorly for the past decade, Buffett noticed something interesting on their books. The company had been investing its profits for the past 20 years in over 40 different stocks. Buffett did the math and it turned out that while the company's stock was trading at about $45 per share, just the investment portfolio alone was worth $65. So Buffett naturally started buying up the Sanborn stock until he held the majority of the voting power, at which point he liquidated the investment portfolio. Effectively, he spent $45 to buy $65 and in 2 years he made a 45% return with almost no risk. In January 1962, at 32 years old, Warren had officially become a millionaire, just 2 years after he had promised to jump off a building. That very same year Warren encountered a cigarette butt that caught his eye, a struggling textile company called Berkshire Hathaway. The textile industry in New England was in decline for decades and Berkshire had closed 9 out of its 11 textile mills. Warren purchased a lot of stock at $7 and eagerly awaited the CEO's offer to buy them back. The CEO had tried to cheat Buffett out of 13 cents, and to return the favor Warren bought out the whole company and fired him. Warren started investing in stocks through the company of Berkshire. He started looking for amazing companies at fair prices. By 1983, Berkshire's portfolio was worth over $1 billion, and just 3 years later, Buffett himself was worth $1 billion. His first purchase using this new philosophy was American Express, a company whose stock he still owns to this day. Buffett himself the richest man on earth in 2008. Even with all of his riches and achievements, Buffett still remains an astonishingly frugal man who can be seen driving his 2014 Cadillac XTS, and often eating McDonald's for breakfast. Warren Buffett's life is a testament to the power of knowledge, patience and compassion. He became one of the richest men alive not by innovative technology or by inheriting billions, but by winning on the stock market consistently for over half a century. It's important to note that Warren Buffett's history and career are ongoing, and his investment decisions and portfolio may have evolved since my last knowledge update. His success and long-term perspective have made him an iconic figure in the world of finance and investing. Warren Buffett is a man who needs no introduction, for he is the patron saint of investing for almost anyone who has dabbled in picking stocks. He is revered by many because he did something truly exceptional. His wealth is primarily tied to his holdings in Berkshire Hathaway. It is clear that the Oracle of Omaha is a man who has lived by his principles and integrity. But above everything, he will be remembered as the man who understood the game of business and investment better than anyone else. Buffett is known for his modest lifestyle and is often cited as an example of living frugally despite immense wealth. He resides in the same house in Omaha, which he bought in 1958. Buffett's down-to-earth personality and humor have endeared him to many. His investment strategies, his business acumen, and his dedication to improving the lives of others continue to inspire and educate, reminding us that in the world of finance, as in life, integrity and wisdom are the ultimate currencies. This is the captivating tale of Warren Buffett, the Oracle of Omaha. And that's the wrap of our story for today. Thank you for joining us on this illuminating journey through the life and legacy of Warren Buffett, a man whose story will echo through the corridors of finance for generations to come. If you enjoyed this video, please press the like, share and subscribe to our channel, and please turn on the notification bell so you won't miss in our every uploads. There's lots of new content on the way, but until then, thank you so much for watching. You are a legend. Until then, I'll see you in the next one. Imagine the thrill of discovering a treasure map, not one leading to buried gold, but to a wealth of financial wisdom from none other than Warren Buffett himself. Welcome to Wealth Builders Wisdom, where we decode the Oracle of Omaha's secrets to accumulating riches and learn how to apply them in our daily lives. Buffett, who stands as a colossus in the world of investing, has amassed wealth not by mere chance, but through a series of disciplined and strategic habits. These habits are not kept behind vaulted doors. They are simple practices and insights, woven into the very fabric of his decision-making process. 1. Embrace simplicity. While Buffett's bank balance has many zeros, his lifestyle does not. He resides in the same modest home he bought in 1958, drives himself to work, and often treats himself to breakfast from McDonald's. The lesson? Opulence does not equate to wealth. Simplicity does. As Buffett says, do not save what is left after spending, but spend what is left after saving. 2. Invest in understanding. Buffett's investments are never hinged on hearsay or trends. They're grounded in thorough understanding and intrinsic value. He advocates for investing in companies that you're confident will stand the test of time. Remember his words, an investment in knowledge pays the best interest. 3. Patience is priceless. In an era where everything is instant, Buffett's strategy swims against the current. He invests for the long term, often holding stocks for decades. His approach is akin to planting a tree and patiently nurturing it to bear fruit. As he often illustrates, The stock market is designed to transfer money from the active to the patient. 4. Debt is a detour. Buffett's aversion to debt is well documented. He views debt as a pitfall that can derail financial stability. Instead, he stresses the importance of building and maintaining a solid credit score and leveraging debt only when it adds significant value. 5. Be a learning machine. Buffett's voracious reading habit is no secret. He spends most of his day reading books, newspapers, and financial reports. He believes that the more you learn, the more you'll earn, and the more wisdom you'll accumulate to make smarter investments. If these golden nuggets of wisdom have you nodding in agreement, then you're in the right place. Don't forget to hit that subscribe button for more insights. Now, let's delve deeper into Buffett's philosophy. 6. The right circle. Surrounding yourself with the right people is pivotal. Buffett credits much of his success to his partnership with Charlie Munger, his longtime business partner. He underscores the importance of associating with people who are intelligent, energetic, and have integrity. 7. Profitable altruism. Buffett plans to give away the majority of his wealth to philanthropic causes. He understands that real wealth is what you give away, and by doing so, he not only enriches society but also sets a precedent for others to follow. 8. Risk and control. Warren Buffett doesn't shy away from taking calculated risks. However, he emphasizes the need to differentiate between controllable and uncontrollable risks, focusing on the former and steering clear of the latter. As we wrap up this journey through the mind of a financial genius, let's reflect on the profound simplicity of Buffett's approach. It's not just about making money, it's about making smart choices, day in and day out. We hope you've enjoyed this exploration of Warren Buffett's wealth-building habits. Frugality as a foundation. It's not about the size of your wallet, but how you use it. Buffett's own frugality is legendary. He doesn't spend on luxury yachts or exotic cars. Instead, he focuses on accumulating assets that grow over time. His philosophy: if you buy things you don't need, soon you will have to sell things you need. 2. Mastery over market mania. Where the market sees chaos, Buffett sees a chessboard. He remains unswayed by market hysteria and focuses on the long-term value of assets. The stock market is a device for transferring money from the impatient to the patient, he asserts. This highlights the importance of mastering emotions and staying the course despite market fluctuations. 3. The wisdom of selective investment. Buffett's portfolio isn't a wild garden but a carefully curated collection of companies. He invests in businesses he understands profoundly, a principle that protects him from unforeseen risks. He believes in the maxim, risk comes from not knowing what you're doing. 4. Charitable commitment. Warren Buffett is set to give away the bulk of his fortune to philanthropic endeavors. This reflects a deeper understanding of wealth, not just as a means to personal comfort, but as a tool for societal improvement. His giving pledge, co-founded with Bill and Melinda Gates, encourages the world's richest to donate a majority of their wealth to charitable causes. 5. Investment in self. Above all, Buffett invests in himself. Whether it's through reading or lifelong learning, he understands that the most valuable asset you can have is your mind. He once quipped, "The best investment you can make is in your own abilities." Anything you can do to develop your own abilities or business is likely to be more productive. For those joining us now, if you're keen on building substantial wealth and finding value in this content, remember to subscribe to Wealth Builders Wisdom for more financial strategies and insights. Let's dive deeper into the Buffett way of life that shapes his financial decisions. 6. The circle of competence. Warren Buffett doesn't stray far from his circle of competence, the areas where he has significant expertise. He suggests that one should define their perimeter and operate within it. Venturing beyond can lead to missteps. Knowing your circle and mastering it is crucial in making wise investment choices. 7. Aversion to debt. Buffett's take on debt is straightforward: avoid it. He compares it to playing the piano with handcuffs on. While some debt can be leveraged for growth, he cautions against over-leveraging, emphasizing that it can lead to financial ruin. 8. The business of life. Buffett doesn't just understand businesses. He understands the business of life. He knows that time is the most precious commodity and suggests treating it with the respect it deserves. You only have to do a very few things right in your life so long as you don't do too many things wrong, he advises. 9. A learning lifeline. He attributes much of his success to his voracious reading habit. Buffett spends most of his day reading, which fuels his wisdom and decision-making abilities. He encourages all to cultivate a habit of reading, emphasizing that it sharpens the mind and provides a competitive edge. 10. The art of philanthropy. Buffett's philanthropy is strategic. He donates to causes where he believes his contributions will have a significant impact. This reflects another layer of his investment philosophy: the pursuit of maximum value, be it in business or in giving back. If you've gleaned value from this video, please show your support with a like, and subscribe for more content crafted for wealth builders like you. Until next time, remember, building wealth is a marathon, not a sprint. Stay patient, stay informed, and keep building your wisdom one brick at a time.